We're almost 2 hours into trading. It is Monday, September 13th. Hello, traders. The last video that I did was on Thursday. I posted the video before the open. That means that you had a chance to take positions in all the stocks that I highlighted. Please go back and watch that video. Every stock that I said was going to go higher went higher. Every stock that I said was going to go lower went lower. Don't take my word for it. Please go back and watch. I want you to understand that this system works. So let's get on with it. Let's see what the market's got today. Folks, we are heading lower. And in here, I had mentioned what was taking place. And if I go to my chat room, you can see the timestamp here, short SPY. This was at 10:10. So about 10 minutes ago. This is about 90 minutes into trading, and you can see I'm ready to short SPY. 10P may not make it into positive territory since the bullish 10P cross. Market's been down. That's a bearish divergence. Short SPY. There's my number right there. Let's go in and take a look at what had me convinced that the market was going to go lower. First of all, very heavy selling pressure on Friday. I had contemplated taking a short futures position over the weekend. However, I had really nice gains because I had gotten short in here on this breakdown. So I decided I'm going to take the gains. The market's been so dang bullish. Buyers have been undeterred by recent selling. I'll find an opportunity to get short on Monday. Market's giving you lots of chances to get short. Lo and behold, I turned the screen on this morning, S&P futures up 25 points, and I'm thinking, this gap is probably not going to hold. And of course, we came down, we tested this low. Market tried to sell off, but it could not rally. This is a very weak bounce. How do I know it's a weak bounce? Because we have little red candles mixed in with these green candles. So this is only a bounce. If we had long green candles consecutively stacked, one on top of the other, different story. That's a sign of strength. We didn't have that. Got these little red candles in here. So we get a bullish 10P cross right in here. You can see how the market was starting to head down. 10P, all of this nice positive bullish cycle. And the way that 10P works is on these deep troughs, you want to buy across, but you want to wait for technical confirmation. There was no technical confirmation in here. We didn't see any green candles. We didn't see a new high for the day. There was no reason to buy. So now you just wait and watch. And now, as you're waiting, you can see that 10P is rallying, but the market is selling off. That is what we call a bearish divergence. Very, very powerful pattern. Now you can see this upward sloping trend line here. We get a bearish cross, but 10P was not even able to make it into positive territory. That tells me that the selling pressure is super heavy. So I drew an upward sloping trend line here. I could see the tails above body. We're starting to leak oil. This is where I got short S&P right when I had mentioned it to you. There's the 10 o'clock mark central time. There's 10:10 right there. Bearish hammer. I'm short in here, so I'm currently short. Here's what I'd like to see. I'd like to see this long red candle preserve half of this body. So right in here, that puts me at approximately 446 on the S&P, on the SPY, excuse me. And I do reference SPY because everybody has SPY quotes. Not everybody has the futures quotes, but 446 is the level that I'm looking at, which is below my entry point. That would be my stop if the market starts to find support. I don't believe it's going to find support, and here's why. Look at how easily the market gave up these gains this morning. So you had this big sell-off Friday, this nice rally. All of a sudden, boom, in the first 40 minutes of trading, we go right back down to the low from Friday. If this market bid was super strong, this would not have happened. We would have seen a little bit of a retracement and then a grind higher, and then maybe another little retracement with a higher low double bottom, and then off we go. We didn't get anything even remotely close to that. We got a sell-off right down to the low. We get this little half-hearted attempt at a bounce and then immediate selling. If you have strong buying pressure, you will not see a long red candle like this because buyers will have their orders layered all in here. And it'll be very difficult for a seller to come in and wipe them all clean, which is exactly what happened here. Got a little bit of a bullish hammer and you got a nice little green candle here. It has been tough to short. That's one of the reasons that I did not take the short over the weekend. First reason was I had nice profits. The second reason is this dang market is so incredibly strong that I knew I'd have an opportunity to get short if I was patient. So you can see here that we're getting follow through selling. I believe that because we are only 2 hours into trading today, Monday, this could get ugly. It's very early in the day. If we take out this low right here, we could continue to drift lower. Let's take a look at the 1 hour chart. You can see on a 1 hour basis, upward sloping trend line here, horizontal support here, broken, broken, and now we're starting to see lots of red candles pile up. Let's go into that daily chart. Here you can see almost a crowning taking place, and when we've had these long red candles like this, we're typically going to see at least some follow through selling. It may not last long, but there will be some follow through selling. See there, you can see there. Most of these red candles you're going to get a little bit of follow through on. September is a weak month. We've got that in our favor from a shorting standpoint. This is a quadruple witch also, so we can expect some volatility into quadruple witching this Friday. So favor the short side right now. I think we're going to see additional market weakness today. I think this is a time to be cautious. You know, I've said that on a swing basis until we get a drop down to this upward sloping trend line, which is also the 50-day moving average. I think for your longer term swing trades, you have to stay sidelined. Be nimble. I'm expecting a drop in here. This is going to present an opportunity for longer term swing traders to get long. Again, we need to make sure that this support holds, but that's what I'm looking at. All those visits to this 50-day moving average have been very brief. So let's take a look. Let's see what we've got. The trades that I'm going to show you today are going to favor the short side. And I am looking for trades, day trades, and perhaps an overnight swing trade if the market closes on its low of the day that you can hold over tomorrow. I am not looking to long-term short a 12-year bull market rally when the Fed is printing money like mad. I am not looking to short a 15-month bull market rally. So please, I know a lot of people are super bearish, and I know everybody's looking for a correction. Look at that price action. This is not the type of market that you want to aggressively short. You should be using half of the size on your shorts that you are using on your longs. This is a stiff, stiff market tailwind, and there is nothing imminent that tells me that the market is going to have a longer term decline. You would need higher interest rates for sure. Central banks are still very, very loose, or you would need to have some type of credit issue to produce a sustained market decline. I don't see any of that happening. So this should be just a normal flush out the bullish speculators market pullback that presents a longer term buying opportunity. So again, please do not go overboard with these trades because we're just looking to make some money on a short term basis on these bearish picks. So we're going to keep the S&P 500 here. We've got a little bit of a bearish cross. I'd like to see that happen when 10P is cresting and rolling over from positive territory. So we'll see what happens in here. And I want to see that halfway point of that long red candle preserved. I've got a wide stop. I'd be using that opening from the red candle as my stop, and that is pretty close to where I got short anyway. So I've got a nice entry, got a little breathing room. Now let's take a look and see what we've got on the bearish side. I'm going to go into heavy selling. Let's take a look at a few stocks here, see if we see some nice daily charts. This is pretty soft, still need to break this horizontal support. I'm just going to be flipping charts, and I'm looking for that right setup. Here on a breakdown below that horizontal support, that would be a nice short. So I'm going to drop an alert line there. Tesla got upward sloping trend line that's drawn, 200-day moving average. Here you have a bit of a horizontal resistance level. Now it becomes support. You can see how the stock bounced off of it and got above it. So not too crazy about that. This is a failed breakout. You've got your breakout there, should be support. Now that has failed. And you've got a 50-day moving average that we're below. Why is a failed breakout significant? Because anybody that was in here buying this breakout is going to get flushed out when they go back below their entry point. So, failed breakout, CRWD. That's a pretty nice one. I also see a nice trend line here. When I see it, I want to drop the line, and that's also the 100-day moving average. So here you've got two lines of support that would have to be breached. If they are, then there's a pretty good chance that the stock will come down to the 200-day moving average. So CRWD, yeah, pretty nice chart in there. Long red candle after earnings. This is a bearish reversal. Stock gaps up, closes on its low, follows through today. Could be a little bit exhausted here. Upward sloping trend line. Violated to the downside. Not a bad one. ZS could set up. This is on the 100-day moving average. I'm going to keep looking. I'm just looking for a good short. I want to find a good short for you to take advantage of today. So all I'm going to do is flip through these charts. This is a nice breakdown here. You've got a upward sloping trend line right here that's been breached to the downside. Look at that bearish engulfing candle. That is nasty. Let's take a look at the selling pressure on a 5-minute basis. ABT, very heavy selling. So I'm going to put up the SPY because I want to show you what it means to find relative weakness. This is the SPY here on a 5-minute basis. You can see we established the low, grind, grind, grind. There's your little bounce in the S&P. What did Abbott do during this market bounce? Typically, a stock that's gone through that type of selling pressure is also going to bounce. When it fails to, it tells you that the selling pressure is very, very heavy. Sellers are the aggressors. So when you see this type of rally, and that type of price movement in the stock, you know that sellers are in control. Abbott should continue to move lower. That may be my pick of the day. I don't know. I'm going to continue to look. Let's see what else we can find. And that came up on our heavy selling list. I'm just going to be flipping some charts. I want to make sure that I have a bearish pattern on a daily basis. Pete, I thought you said you were day trading. What are you looking at a long-term chart for? I have to be super careful when I'm shorting because I am trading against a very strong long-term market uptrend. So I want to make sure that I have staying power in that short position. If I know that the stock looks like a short on a daily chart, then all I have to do is find my entry point on an intraday 5-minute chart, and I know I've got some breathing room so that if the market goes through its herky jerky downward trend, that I can weather some of these bounces and stick with that short because I like the short on a swing trading basis. Does that mean that I'm trading it short on a swing basis? No, it does not. It simply means that I'm trying to get that short-term momentum on my side, knowing that on a longer term swing basis, the stock is also weak. I do the same thing when I buy stocks. I like to make sure that I've got a good daily chart, a bullish daily chart before I buy a stock intraday for a day trade. So let's just keep looking through. Twitter is one that I think sets up. This could be my bearish pick of the day. In fact, it is my bearish pick of the day because I set an alert right here. And right on the close Friday, I got a bearish alert on Twitter. Here's why I like this setup so much. Got a nice sell-off here. This is your flagpole right in here. Now we've got a nice little uptrend line right here, and that has been breached. That is a bear flag pattern. You should know what a bull flag is, and you should know what a bear flag is. So you are below the 100-day moving average, and now we take out the 200-day moving average with ease. Horizontal support there violated as well. TWTR is your short that you should be looking at during the day today. Look at this nice S&P rally. Rally, 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 rally. What's the stock do? Yeah, barely can get off the deck. Sellers are still pound, 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 pounding the stock down. They want to get out. They will sell any bid. Long red candles, stacked, big volume, lots of check boxes marked. Heavy selling Friday, long red candles stacked one on top of the other, massive volume, relative weakness. Stock can't get off the deck. I'll show you that relative weakness by putting the 10 SI indicator up. You'll be able to see orange line below zero relative weakness. Okay, so the stock is picking up a little bit of relative strength in here on this bounce, but that's only because it's been able to maintain itself during this market leg down. So how do you trade this? You draw your upward sloping trend line right here. Click that. Click that. When the stock breaches this upward sloping trend line, I'm going to get a pop-up alert here. If the market is still weak, I will be shorting that stock. And when it breaks that, then it'll be back down relatively weak to the overall market. That's how we do it, folks. Right now, keep your day trades on a short leash. If you're trading the short side, make sure that you continue to have some downward market momentum. Sell off, bounce. That's what you can expect out of this market decline. Sell off, bounce, sell off, bounce. So here's how I prefer to trade it. When I get these long red candles and then the action stalls out for more than 10 or 15 minutes, I take profits in here because I know we're going to get a bounce. Then I wait for these tails above body and then I start reshorting. Well, why don't you short up here, Pete? Because this could continue to go higher. We are in a very strong market. So on these big drops, take some profits, go to the sidelines, know that you're fighting the longer term uptrend in the market. When you get this nice little rally in here, this is where you start looking to reshort. Then you've got your opportunity here with these long tails, and then right in here, you would short when that upward sloping trend line is breached. So we've got an early market decline today. I think this is going to be problematic for buyers because they're going to start pulling bids. They're going to see that there is some bona fide selling pressure. They're going to be less aggressive, more passive than they have in the past. When they start pulling their bids, you will start to see the market come in. And if this persists through the course of the day, very similar to this type of price action, down, pause, down, pause. Oh, here we go. Nice little support level in here. Okay, all is good with the world. Market rallies. And now you get this herky-jerky sell-off in here. Red, green, red, green, red, green. Nothing going. Short sellers are super, super cautious in this market because they have to weather big, long green candles like this. It's been very, very hard to short. And buyers have been super aggressive. But eventually, buyers will throw in the towel when they see major support violated and when they start seeing stacked candles. There was another tell from last week that told me that the market was going to be selling off. Bearish cross, 10p early in the day, right in here. This was a gap reversal on Friday. Market sold off. This told me heavy, heavy selling pressure right in here. Market can't get off the deck. It cannot recover half of this long red candle in here. So you know there's some heavy selling. We're going to try and take out that low from the prior day. This is a big tell right here when I spoke of a bearish divergence here. Here you've got another case where look at how far the 10p indicator had come on this bullish cross right here. Again, you must have technical confirmation. And if you look at this downward sloping trend line in here, we weren't able to recover more than half of that red candle. We certainly weren't able to recover the opening from that red candle. So there was no reason to buy that bullish cross. You had to wait. So as we're waiting, we start to see signs that, look at 10P lift off. And what's the market doing? It's actually drifting lower. This is another bearish divergence. And almost the entire cycle from here all the way to here, almost the very end of that bullish 10P cycle, and the market has barely gotten off the deck. When I saw this type of rebound and that type of price action, I knew that a good short was setting up. Got your upward sloping trend line here. There's our bearish cross on 10P. Never got into positive territory the rest of the day. Heavy selling. It's the 10P indicator. Took me 10 years to develop. It's all I use to trade the S&P 500. It is what governs our trading intraday. So when we get these little bounces and we start to see this 10P indicator rolling over, that's when we want to be short stock. Be short today. Please take a look at my video from Thursday. Look at every single pick that I had in that video. Please bring up the 5-minute chart last Thursday. Check every symbol and make sure that what I'm telling you is true. This system works. Got a lot of people who have been able to come in and master it. This is not just about me. You look in the chat room, you're going to see tons of trades left and right by people other than me who are making money that learn and understand the system. So you can learn it, you can replicate it. Thanks so much. Good luck with your trading. Hopefully you're not too long because I think we're going to take a little bit of pain here. But ultimately, if you're a swing trader, doing the right thing, being super patient, waiting for that market pullback, I don't think you're going to have to wait much longer. I think we're going to get it perhaps even this week with quadruple witching coming up. Thanks. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.